In this video, we're going to discuss 9 different types of audit procedures and evidence that you'd obtain throughout the course of an audit. Perhaps the simplest way to obtain evidence would be to ask the client questions. For example, are you aware that any fraud has occurred at the company in the past year? The issue with this is it's not that reliable because what is the client going to say? They're not going to say, yeah, there's all kinds of fraud going on here. You should be very skeptical about our financial statements. However, you should still ask the question because every now and then the client will tell you things that are material to the audit. A more reliable way of getting information is to confirm with a third party some of the representations that the client is making to you. For example, if the client says, look, we have $100 million cash in our bank account, you can do a confirmation with the bank where you're mailing a letter to the bank and saying, look, does the client in fact have $100 million in the bank? So it's a third party, so they're going to be more honest than the client. The client obviously has an incentive to, in some cases, be dishonest with you. If we're talking about a customer of the client, you can confirm and say, okay, do you in fact owe the customer $80 million? You confirm the receivable balance. You could talk to a lessor about lease terms. You could talk to an attorney about pending litigation, but you're going to a third party and getting representations from the third party. Also, you can inspect records or documents, and there are 2 ways of doing this, and it has to do with the direction of testing. One is tracing, where you pick a source document, for example, a customer purchase order, and then you trace it all the way forward and see that did it ultimately get recorded in the journal? Was a journal entry made to record that sale? Or vouching, you are going backwards. Vouching, you start, for example, let's say you have a journal entry for a sale, and then you take that journal entry and you say, okay, let's go back and see if we can find the source documents. Was there ever a shipping invoice here that the product was shipped to the customer? Was there a customer purchase order, and so forth? So in each case, you're inspecting documents, but in one case, you're saying, okay, let's start with a source document and then go forward and see if it ultimately was recorded. Okay, so you're testing for completeness. And then with vouching, you're going the other way where you're saying, okay, I've got a journal entry here, but was there in fact really a sale? Did the sale occur? Okay, so now you're testing existence and occurrence. Now, you can also inspect tangible assets. So, for example, property, plant, and equipment. If the company says, yeah, we spent a lot of money on this new machine, you can go and say, okay, I'd like to see that machine. You can watch the client count inventory. You can go and actually look and see, do they actually have the inventory that they claim they have? For example, if we're talking about a farm, you could count the amount of livestock that they have. Observation has to do with watching the client perform an activity. For example, if they're counting the inventory, you could stand there while the client is counting the inventory and observe and see if they're actually keeping accurate records of their inventory. If you're watching them count the inventory and you see they're doing a very sloppy job, that will tell you something about the risk. Okay. Now, you can also look and see as the client applies an internal control. So there's different things you can just go and actually physically observe the client performing that activity. So you can observe tangible assets. You can go and say, okay, I want to see a machine and so forth. We can also observe the client actually performing activities. And then you can go and you can recalculate, for example, the calculation of depreciation, bad debt expense, interest, anything that involves some kind of mathematical calculation. You can go as the auditor and recalculate and say, okay, what should the depreciation have been? Let's say the company uses straight line depreciation. You look at all their information and you say, okay, they got a depreciation expense of $70 million. I'm going to recalculate and see if I get to $70 million. And it's either going to be right or wrong. Reperformance is similar to recalculation. So you might think, oh, how is this different? But it's a little bit broader. Reperformance has to do with not just mathematical accuracy. It could be anything. You could say, I want to go and actually age the accounts receivable. I know the client did it. The client performed an aging of accounts receivable and said, oh, okay, these accounts are less than 30 days due. These accounts are 30 to 60 and so forth. They did all that. They grouped the receivables and so forth. But you could go as the auditor and say, I'm going to perform the aging of the accounts receivable. I'm going to reperform that task and see if I get the same result that the client got. Analytical procedures have to do with analyzing financial information, and in some cases non-financial information, and seeing if you find any unusual relationships and is the information plausible. For example, you might look at the gross profit percentage of the company and then compare that to last year's gross profit percentage. So if this year it's 60%, but last year was only 48%, you might say, okay, well, why is that the case? Why is that the case? Is the company misstating its cost of goods sold? Is there anything like that that I should be aware of? So you're comparing, in some cases ratios or so forth, and you might look at competing firms. What you're trying to ascertain is, okay, is there any reason to believe that this information is not plausible? And then I might say, so for example, if I say, okay, sales are going up dramatically, but we don't see a corresponding increase in receivables. What is going on here? And so you're trying to identify any kind of red flags or issues. Similarly, you can do that by scanning accounts. You can go through and say, okay, I want to find some unusual items. For example, normally we debit expense accounts. There are occasions where we would want to credit an expense account, but for the most part, expense accounts are debited. We increase them with a debit. That's a normal journal entry we're making for an expense account. So if you see very large credits to expense accounts, for example, you see, I have $100 million credit to an expense account, you go and you scan and you say, okay, if I see any credits to expense accounts higher than $10 million, I'm going to investigate. Oh, okay, here's one that's $100 million. That's a pretty big credit to an expense account. Let me go and investigate this further.